Welcome, everybody, to Mortgages with me and Jeff Mudrick. My name is Michelle Ellis. I'm a local realtor in the Hastings and Northumberland counties, which is kind of in between Toronto and Ottawa. And Jeff is a mortgage specialist, and he works the entire province.
I do. That's right. Yeah. A lot of folks out in the Ottawa area. I'm personally based in the GTA, but definitely helping people throughout Ontario.
Amazing. So this is episode 2 of 12 for 2023. And I'm super excited to be bringing you guys information through Jeff, because I don't always know what's going on in the mortgage world. So he is my avenue of getting all of this information out to you guys. So tell me what's happening in the mortgage world since we talked in January.
Yeah, we're seeing a lot of changes, actually. So obviously the big news a couple of weeks ago was the Bank of Canada yet again raised interest rates.
I know interest rate. We both thought that it wasn't going to increase.
Yeah. However, they increased it the smallest amount they've increased in the past year, which is, I guess, a good sign. But more importantly is in the report that they released, it says, hey, we're not pivoting back to decreasing rates, but it's in all likelihood we're going to pause these hikes going forward, which is great. Yeah, it's a start. So they've kind of made an emphasis. It's not a pivot; it's a pause.
Right. Okay.
Which is interesting. So that's with variable rates, and I've gotten a lot of phone calls over the past month from clients saying, "Hey, what's up with my fixed rate? What's up with variable? How come my payments are getting too high? What can I do?" So what we're seeing a huge trend of is, I'm going to emphasize again, when the Bank of Canada announces an interest rate increase, it only impacts those with a variable rate. Variable rates and fixed rates go up and down based on two completely different factors. One is based off of inflation, and one is based off of the 5-year bond yield market. Which we're not getting into right now. But it's been great because we're seeing a huge decrease in fixed rates, short-term fixed rates as well. So a quick example is a couple weeks ago, a client was in a variable rate mortgage for the past year. And my favorite thing about a variable rate mortgage is the penalty to break that mortgage. It's always going to be 3 months interest no matter what, unless you're in a wonky product, but standard products is 3 months interest. So clients had to break the mortgage. It cost them $10,000 to break it. It's a sizable mortgage, so that was why. It was a very large mortgage. However, over the next 3 years, they were saving $1,000 a month on their payment. So to pay $10,000 to break their mortgage and save $36,000 over 3 years is a lot of money.
Yeah, absolutely. And that's the thing. I think a lot of people who are in variable rate mortgages maybe just don't understand or don't have the knowledge on knowing that they can, revisit this situation and look at other options, right?
Yeah, for most people, the quote unquote sales pitch, or what most people grasp onto when they opt for a variable rate mortgage, sure, it's the payment itself for the past 30 years or 33 years now, it's been cheaper to take a fixed rate mortgage over the 5-year term.
Right.
However, it's really all the other perks, the flexibility, the smaller penalty, the potential that it's going to be a lower monthly payment. So what we're seeing right now is a lot of people taking advantage of some of the flexibility and opting over to a shorter term fixed rate.
Right. And that's the one thing, I know we've talked about this before, but when with a variable rate and a fixed rate, you can't go from a fixed to a variable, but you can go from a variable to a fixed.
100%. So for example, if you're on if you have 4 years left of your term, you can definitely go to any lender and say, hey, I want to lock in whatever the 4-year fixed rate is. You can do that. The lender can say whatever they want at that point. They can say, sure, but the interest rate's going to be this amount, or sure, they don't have to give you the best rate available, but you can definitely do that. And right now, if you're with the majority of lenders, you're going to be saving money on a monthly basis. However, the recommendation is still, so if you're with a big red bank, for example, I won't use any names, but the big red one or green one or blue one, whatever, and you want to lock in a fixed rate, my suggestion, one, would be to shop that rate around, because they're not going to give you the best one, I promise. And two, you can do that, but you can do that yourself. You can use a mortgage broker, whatever makes sense for you, but definitely shop that rate around.
And I think a lot of people, so from my experience, I think a lot of people are afraid to negotiate. And I guess I can appreciate the fact that maybe that's not something they have to ever do on a regular basis, whereas I do negotiate on a regular basis.
Right.
So I'm always reiterating, like, make sure. And some days I'm like, I wish I could make the phone call for you, because I will go to bat for you.
No, I feel that so much. Oh my gosh. Yeah.
Yeah. So it's good. It's good for people to know that they definitely have negotiating opportunities that they can take advantage of. And
like
if you need a coach, you can contact one of us and we can just kind of give you some good feedback on how to deal with that. But
yeah, even if you're an anti-bank person or an anti-mortgage broker, or whatever it is, there's always room for a bit of a lower interest rate. So another quick example, I had clients come to me. They had signed a 5-year term with a big bank. They did want to switch from the variable to a fixed. The bank said, hey, this is what our 5-year, or at that time it was a bit lower, 4-year fixed rate is. They called me and said, Jeff, like, is this a good rate? And I said, absolutely not. I would say this and this and this to the bank and see what they say. They did that. They got a much lower interest rate, and then they're happy. I don't need to get the business out of it. These are happy clients.
Yeah.
And they're in a good spot now.
Yeah. And yeah, that's another good reason why you need to hire a professional, because we can definitely, outside of our realm, still help you get those great deals and discounts.
It's like you say all the time, right? It's just like guiding. You're just guiding people in the right direction. Like, they're ultimately making whatever choice it is. But if they're leaning on us for some advice, I'm sure you are the same. We'll happily provide it.
Yeah, absolutely. And we are seeing a bit of an increase in activity in the market, which is kind of nice. I think, though, that the conditioning of everybody's minds still need to be worked a little bit with pricing and that kind of thing. And now, average days on market is around like 35 to 40 days. So that's something that people still have to keep in mind. I mean, if it's priced really, really well, or priced below market value, it may obviously sell much quicker. But is that something that you really want to do? Do you want to, give it away, or do you want to get as much out of it as possible?
Oh yeah, like it's such a different world we're in. Where imagine last February, you said average days on market is over 30 days. Yeah. People would think something's terribly wrong with the house and no one's ever gonna get it. And that's just it is what it is right now. I think I personally think it's really good for buyers, because you're not having to rush on a Tuesday night to see a property to put an offer in that same day. And for sellers, like you said, maybe you don't need to take that first offer. You have some extra time before you have to make that decision.
Now, one thing that I would give advice on right now is right now, with the market starting to kind of gear up for the spring, right now is still a really good time to list your home, because it's going to be inflated or inundated with tons of listings come the next couple of months. So everybody's just kind of waiting for the spring market, whereas the people that are not waiting and they're listing now, they're able to move forward and not have as much competition in the market world for listing.
Yeah, I think it's like you said, it's probably the same every year, but I think it's that gentle reminder that, hey, before all the houses jump on the market, maybe you want to get yours out first. Well, like, I'm noticing for sure there's a lot more activities in terms of purchases. I'm getting emails, Jeff, I'm going to see these 4 properties this weekend.
Yeah.
Like, it's definitely a difference than end of December, early January.
And everybody's kind of working their way out of the winter blues, I think. And today is beautiful. I think it's like 5 degrees or something here, and you just got back from vacation, so it's not as warm as what you've been used to.
Not quite, but
but it's beautiful. So that means people are in generally speaking, better moods. More sun has been out, which is nice, and people are starting to feel optimistic and excited about the coming months. So I think a lot of people want to get into their homes before the summer hits, usually, so that they can enjoy their house.
Yeah, and like what's really surprising a lot of the clients I'm working with is that rates, if depending on what's most beneficial for the client, but typically rates are down. It's not getting the same sexy news headlines, but fixed rates are down like almost a full % than in August, which is absolutely mind-boggling. They dropped 1%. So we got an approval back at, we got an approval back last week in the 4.5 range, got like just a little bit higher than that as well. And these are for insured deals, which is like less than 20%. These are for 20% or more, over $1 million purchases. Like everything right now is coming in under 5%. So
that's good.
Which is just such a change. So I think, from my perspective, I think that's why we're seeing a lot of buyers coming out of the woodworks saying, hey, we're under 4% right, or under 5%. Let's hop on this for a short term.
And then that's why you are suggesting to jump on that short-term kind of train so that they can kind of weigh it out and see what happens in the next 12 months.
That's it. Yeah, exactly. So, does anyone know what's going to happen over the next 12, 24, 36 months? No, the Bank of Canada doesn't know. Like no one really knows. No. Typically it takes between like 12 to 18 months of a rate hike or decrease to see the effects of it. Right. So March 2022 is the first rate hike. So we're really like probably just starting to see that one.
Right.
So once it comes to, October, or November, or December, it'll be a year since those big rate hikes have actually hit. So let's see where we're at. So the reason why we're suggesting, or my team and I are suggesting a short-term fixed rate is they're pretty low right now. They're about 1 to 1.5% lower than a variable rate. And we're just kind of kicking the rate conversation down the road a couple of years. Whereas let's see kind of where we're at that point.
Is there any disadvantages to a 1 year or a short-term mortgage loan?
Yeah, there is if let's say rates skyrocket, which for example, like last year, last January, a client wanted a 1 year term. Rate was 2.2%, and now they're having to renew at 4.9 or 5.2%. So no one really could have predicted that, but so that's the downside.
But they could also go into a fix. Well, I suppose that's what you're talking about.
They were in a fixed, they just wanted a very short-term fixed mortgage.
Right.
The other kind of potential downside is, if you are this is with a fixed rate in general. But if you are needing to get out of that mortgage for whatever reason, the penalties to break that mortgage are somewhere between like 3 or 4% of the total mortgage balance.
Wow.
So that's why a lot of people do to opt for the variable, or especially in the last couple of years. Just allows for that flexibility.
Cool. Well, I didn't know that, so that's good information.
Yeah. We're always learning here on
I know. So, is there anything else that you think is worth mentioning right now, or are we just going to ride this out and see if there's different changes coming in the next month?
I think there'll always be tons and tons of changes. We're seeing, there's always talks. We'll have to save this for March, but there's talks about how investment properties are going to be qualified, and the foreign buyers ban. Let's see what the effects are around that, but we'll get to it. But today is just kind of positive news in terms of those short-term fixed rates are very popular right now. Yeah, and for good reason.
Very good. So I guess we'll wrap this up then, and we're always available to answer any of your questions. We, Jeff and I, are available all on social media platforms. I am at the Most Referred Realtor, and your tag or hash is
Jeff Mudrick Mortgages.
Perfect. So feel free to reach out to us anytime. We're here to help, and we'll see you in March.
Awesome. Thanks, Michelle.
Bye.